Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 26, 2018. First of all, please hit the like button and subscribe to this channel. I want to say a big thank you to all of the subscribers who has been with me for many years, actually. So again, thank you very much for your continued support. You make this channel possible. Yeah, pretty strong selling throughout the world, and we'll kind of delve into more details about various levels to watch. We'll get really granular with 4-hour charts on mini futures. Some sectors are outright bearish. There's a new sector out there. I needed to look it up actually, but it also might be bearish. Lots of, kind of indicative industry groups, biotech, semiconductors, mining, all in the bear markets, and the entire capitalization size, small and mid cap parts of the market are in a just outright bear market. So the evidence is mounting towards possible market turn, towards the bearish side. But since we're traders and we're not really investing, we will concentrate on opportunities that we will see in the near term. And I think if or when S&P turns, then we will act accordingly. Anyways, Europe, Japan, emerging markets all at fresh lows, junk bonds at fresh lows. I think treasuries might be, if you're aggressive, you could potentially short here. I think we could be seeing a dollar breakout, and gold could take a dive from here. Not so sure about oil anymore, and natural gas with cryptos did nothing. Okay, so this is a chart of S&P 500. Mini future continuous contract. These 4 lines on this chart are part of my indicator package. You can find out more about it at MasterChartsTrading.com. That's MasterChartsTrading.com. So here, the way I'm reading this chart, basically here on October 10th we had a significant amount of selling. Then I thought we were all clear on the 16th, and that clearly did not materialize. So now the situation got significantly worse. We have on the 24th of October 2018, here we have a close below this red indicator line. To me, this means caution. Means that we need to, if we had a long position, we definitely need to consider either cutting our losses or at the very least getting ready to cut our losses. And I would cut my losses if I had a position open in this particular instrument if I saw a close below the yellow line, which is currently at 2599. Now at that point I would be starting to think about, placing bearish bets, shorting, in other words, betting on a continuation to the downside. And that could be done through, for example, for S&P 500 ETF SPY, you can buy puts. And notice I marked here again bearish levels at S&P 500 ETF SPY at 259.79. And considering so many other instruments stock-related instruments are kind of moving towards the bearish levels, this is not out of the realm of possibility. We're very close to an outright bear market. Now, of course, if we get there, we will see, obviously, we will see lots of back and forth. But if we fail below these bearish levels, below 2599, I think then we will need to wait for a rally, maybe even not in a big rally, and just short. Potentially some people like to short immediately for a move down, just close below this yellow line and boom, immediately they short. It's an option, yeah, but the important thing for longer term investors, if you are a longer term investor, is like, for example, if you have retirements accounts, if you had some retirement or custodial accounts. So I recently cut my exposure even further. I have about 20% stocks, and I have about 80% cash. So we basically, I don't like this setup right now for longer term investors. If we get to bearish levels here, I will just say, okay, I will have no stocks, I will have 0 stocks. And if this continues lower, then I will be correct. If it bounces here and continues higher, then I will just re-enter. I will just start buying again at about 278 here for S&P 500 ETF SPY. So no need to be a hero, right? We don't know where the bottom is going to be. IWM, small caps, completely avoid. This is a big deal. 24th of October 2018, right there. Close below this important support resistance line. It's 147 currently. Mid cap, MDY, same thing. 24th of October 2018, we see a close here. This doesn't look good. Now, mid cap together with small cap, so I looked it up. There's a total stock market index ETF, and it contains 3,600, almost 3,700 stocks in it. So you can see that by market capitalization, the large cap, and let's just go with this number here, is basically 70% of the economy, and the rest, the medium and the small cap, is about 30%. So the large cap still dominates. So we got mid cap in a bear market, small caps in a bear market. So that's 30% of the United States economy, while S&P 500, the large caps, are approaching bearish levels as well. So we're literally about 2% away from a bear market. So if we see a close below again about $259 to $60 here, I think we'll begin thinking about the bull market coming to an end. Not a guarantee, obviously, but we'll at least start contemplating that idea. For now, it's just kind of up in the air still. Alright, next let's look at sectors. So as far as the sectors of the stock market are concerned, here's an easy way to figure it out. Here's S&P 500 ETF SPY on their website, and they have a sector breakdown basically. Now, recently there was this separation between information technology and this new sector called communication services. So communication services ETF XLC has basically technology sector companies, but they are now grouped together with some of the telecoms and some other ones. And here's another sector break. Within the sector breakdown, there is a industry group, so entertainment interactive media, more media, and diversified telecom. I'm guessing this is like Verizon right there. So I don't know, to me this still looks kind of like technology sector. So basically information technology together with this consumer services XLC, and unfortunately there is not enough yet data for me to make a indicated guess of where this is going. But this is XLC, but notice this is a fresh low since inception, and inception was just a few months ago. So not really enough data. You can see that the indicators are not really showing anything. I need 250 days to make any kind of educated guess, but this doesn't look good. And for example, Facebook, this is a new low for Facebook, and by the way, these are actual alerts to my subscribers. Avoid twice on Facebook, and notice there is now a new low, so at the very least you could have exited. Don't really trade this one. Google, also known as Alphabet, also really close to a bear market. I mean, this is I mean, the price is right there, so we're like 4% away. This is nothing. Google is huge, you know. Look at this. We got almost 3% of S&P 500 is Google. Facebook, Google, so you got, look at this, 1.59%, 3%, so big names under pressure. Some of the sectors that are now entering a bear market, so we have, let me take a look here, we got financials, industrials, energy, materials already in bear markets. Communication services, maybe. Well, let's say yes. So let's say XLC. That's another, what, 10% of the market. Let me see. About 10% of the market right there. 9.95% of the market. Together with financials, 13%, industrials, energy, materials. Did I say financials? Yeah. So let's look at the big ones, financials, XLF. There is an alert to my subscribers here on 12th of October, and since then an additional 5% loss. So hopefully if you are a subscriber, then you exited already. A bounce is, very likely, but we don't know from which levels it will bounce. Maybe it will continue another 5% and then bounce 3%. So in this case, and I keep showing the same example, XHB is just perfect. This is home builders, and this is, let's say that you always in the past exited at your predetermined stop, and then for some reason here on 13th of August you decided that you're just not gonna do it, and then look what happened afterwards. You got punished. It's another 16% loss. So we have to exit basically at our predetermined stop. So I'm taking this graph of financials XLF as it stands, and it stands not that great right now. There is a breakdown there. For this chart to become bullish again, it needs to travel in the opposite direction, like 11, almost 12%, to 28, 30 or so levels to become bullish. So I'm avoiding that one. Industrials, another one. Actually, this is also for my subscribers. 23rd of October, there's an avoid alert. XLB, materials sector, there's an avoid alert right there on the 9th of October of this year. and additional 10% loss afterwards if you didn't exit. So, you know, again, psychology of trading, you have to carry out your plan. And a new addition to this ever-growing list today is a freebie for YouTube members here, YouTube listeners. There is an avoid alert right there on 24th of October, and yeah, it doesn't look good either. All of a sudden, energy is under pressure. So, you know, when I get to oil, maybe I'll just hold off on opening any new positions for now. Yeah, you know, I'm perfectly okay with just doing nothing. And then here's a couple of big industry groups as well. You know, biotech, another freebie for you guys. There's a void alert on the 22nd of October. Semiconductors, SMH. Look at this, it collapsed back in 10th of October, but the more diversified one, XSD, a little bit more recent in my opinion, so here's another freebie for you guys. So not a great looking charts. Also Dow Transports, if we believe in Dow theory. So here's Dow Jones Industrial, and also kind of breaking below this red line, so caution together with S&P. But Dow Jones Transportation is just approaching outright bearish levels, which is really close to this yellow line. So yeah, many red flags. Also, obviously, the entire foreign markets also in just bear markets. We can look at Europe, Japan, emerging markets as major constituents of the foreign markets. So let's look at Europe, EZU. These are new lows. We can do it also VGK. You know, same thing, new lows. This looks just a classic textbook bearish security, and we need to think about shorting it. Japan, also relatively recent addition to the avoid list. There it was on the 11th of October, avoid, and another, you know, loss afterwards. So yeah, a bounce is likely, but again, I think it might be a bounce to consider getting short. And of course, emerging markets, the absolute winner on the downside. Unfortunately, you can see a low, a fresh low just this Friday. So overall, honestly, it's not looking good. If we just look in isolation at stocks, but pretty much everything else doesn't look that appetizing either. So for investors, there isn't much out there, I think, but for traders, there's going to be opportunities, definitely. All right, let's continue to the various bond funds. So let's look at junk bonds first. Let me see if there's a correlation here with junk bonds. No, but that's okay. As I keep saying, junk bonds correlate highly with stocks. In other words, junk bonds or high yield stocks usually move together in lockstep with the general stock market. So this is a new low for junk bonds today on Friday. You can see that I was very worried about junk bonds. Well, I started being worried about junk bonds back here in December 2017, but then I got pretty outright bearish in February 2018, and then notice that these arrows were put in here. If you watch my previous videos, I put them in during the, I think I actually shorted it here myself, I don't remember exactly, during the live presentations. So the same thing here, it's not looking great. I thought we're gonna maybe break out. That didn't occur, obviously. So, man, what a nice move if you shorted it here. Two fresh 52-week lows. Even aggressive shorts got in on some action right there on 16th of October 2018. Yeah, so junk bonds leading to the downside, not a great sign. Bonds in general, so here is the TYX, the 30-year treasury yield, seems to be in an uptrend. That means the bonds, the long-dated treasuries, TLT, are in a downtrend, and you can play it on the downside. So actually, right this instant, if you're an aggressive trader, then maybe you can short here. I'm not a big fan of this, but if you like it, maybe you'll do it. Again, if you're a trader, then you definitely want to have the indicators for yourself. Just go to scripts, go to TradingView, and just look for me, MasterCharts, and there are my two scripts. And then send me a message, and I can share the indicators with you. Because look, it's the price action is pretty straightforward. You can just time your entries, very simple, without thinking about it too much. Yeah, so bonds, I'm just basically doing nothing with them right now. Maybe I'll consider shorting them, but I'm perfectly fine doing nothing. All right. Okay, so let's continue to Forex. There's not that much going on. I mean, I'll show Euro as well, because I don't have any trades currently. My Canadian dollar trade got stopped out, so here's my US dollar versus Canadian dollar. I got, I made a profit, obviously. I entered at 1.2977, moved, then I got, let me see how many pips was this. Yeah, so overall, I think I got about 75 to 80 pips on this trade. Just, still decent. And the thing is, I got stopped out right there during the spike on the 24th of October. If I held through that, then I probably would have gone, I would have continued holding now. Maybe it sold another half. Euro versus US dollar. Well, let me show you that one. Now, my subscribers, if you know about this, then, or rather, if you're a subscriber, then you know that I shorted. I sent an alert a little late here, honestly. So I was hoping for a little bounce, but if for some reason you took this trade on the 21st of September, and actually a very legitimate reason to take that trade, that's a 400 pip gain in your favor, obviously in your favor. Anyways, not to go into too many details because I send alerts about Forex as well now, so I don't want to give too much away. You can sign up at MasterCharts Trading, get my alerts as well, and get the indicators, most importantly, so you can trade yourself. This is a bullish chart. Maybe we're reversing here near the highs, but gold action doesn't necessarily look. Gold action looks like we're topping out right there. Yeah, looks very toppy. I mean, anything is possible, but this looks to me very toppy, so I would consider going appropriately, and obviously appropriately here is to short. Something like that. Okay. Alright, let's look at oil, US oil. I almost sent an alert here on the 22nd of October, but then I kind of thought against it. And probably a smart decision. Let's wait. I don't know, because we're kind of in this no man's land now, and if we get to like 63, then I would be not looking to buy it for sure. Maybe I'll be looking to sell it. Natural gas, kind of just, trading around this blue line, but I think this is a bullish security. I think I would want to be buying it, basically, natural gas. All of the cryptos doing really nothing. Absolutely nothing is happening in the crypto universe. But if you head over to MasterChartsTrading.com, click on alerts and indicators and sign up for one of the plans. Now I got yearly, monthly, and monthly, but alerts only for now. This may be changing slightly, and what exactly I'm covering might be slightly changing, but overall I think the most important thing is to get these trading indicators for yourself, and then start to trading by yourself, basically. Alright, that's it for this week's recap. If you have any questions, comments, please comment below, and of course share this video with others and like the video. Thank you for listening, and have another great trading week. Bye bye.